Treasury has decided to address a question that has arisen frequently whether income tax changes to simply conform a state or territory's tax law with recent changes in federal income tax law are subject to the offset provision, blah, 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 blah. Regardless of the particular method of conformity and the effect on net tax revenue.
Good morning, everybody. If you're just joining us, thank you for joining us this morning. We're going to wait maybe just 2 minutes or so, 2 minutes and a half, something like that, to get others to join us as well. But thank you for spending the time this morning with us. We're going to have a great discussion this morning. Good morning again. If you're just joining us, thank you for joining us. We're going to wait maybe just a minute and a half, something like that, to allow others to join us as well. And then we're going to start the morning scoop. All right, I think we are going to start. Good morning and welcome to the Arizona Capital Times Morning Scoop on Arizona's tax climate. I'm Luigi Del Puerto, the publisher and editor of the Arizona Capital Times. We will talk about the tax climate in Arizona, as I mentioned, get an update on the state budget process, flesh out major tax proposals in the legislature, and we will also delve into Irs Tax Conformity legislation. But first, I want to thank our sponsor this morning for making this forum possible. I want to thank the Arizona Society of CPAs. The Arizona Society of CPAs is a professional organization of CPAs working together to enhance the profession and better serve the public. Since its establishment in 1933, the association, the society has grown from a small group of 10 founding members to more than 5,000 CPAs today. The society works toward enhancing the image and status of CPAs, and it is an active participant in the legislative process on issues affecting the profession. The membership is diverse, with CPAs working in public accounting, education, industry, government, and more. The Arizona Society of CPAs is the voice of the CPA profession in our state. I want to welcome Oliver Yandel to give intro remarks. Oliver is the president and CEO of the Arizona Society of CPAs. He previously served as executive director of the Association of Legal Administrators, the largest international organization providing support to people in the legal management profession. He's active in both the American Society of Association Executives, where he holds the Certified Association Executive designation, and the Association Forum of Chicagoland, where he served as chair of the board of directors. He has been recognized by Crain's Chicago Business as a member of the first class of Chicago's notable LGBTQ executives. Yandel is a native of Louisiana and holds a BA in journalism from Loyola University of the South in New Orleans. He has a JD from Washington College of Law at the American University in Washington, D.C. How did you escape journalism, Oliver?
I decided to become a lawyer instead.
Please go ahead, sir.
Thank you very much, Luigi. Luigi. We're very excited to sponsor this morning scoop on taxes. As Luigi mentioned, we are a non-partisan expert resource for policymakers on tax, accounting, finance, and business. And our team of experts reviews each piece of legislation introduced each year and provides feedback, support, and guidance to lawmakers. There's a lot going on in the world of taxes. Luigi mentioned federal relief monies and what they can and can't be used for, Proposition 208 legislation, tax reform and income tax conformity. There's just a few of the top hot topics facing the legislature, but we've got great experts on today's panel, and I'm sure the conversation will be illuminating and insightful. I'd like to briefly thank Majority Leader Toma, Senator Bowie, Jared, and Kevin for participating in today's panel. Leader Toma has been at the center of tax issues since he took office, and Senator Bowie has likewise been a leading figure in this arena. Both Leader Toma and Senator Bowie have been supporters of the CPA profession, and we look forward to continuing to work with them. We're excited for today's discussion, and now I'll hand it back over to Luigi, and thank you all for having this discussion. Looking forward to the conversation.
Thank you for that, Oliver. We have a great panel this morning. Joining us is Representative Ben Toma, who represents LD 22 and also serves as Majority Leader of the House. Born in Romania, Representative Toma came to America in pursuit of the American dream in 1987. He has lived in the West Valley since 1996. He's the co-founder and CEO of Century 21 Toma Partners. It is one of the fastest growing Century 21 franchises, and one that has been consistently named as one of Arizona's top 25 real estate brokerage firms. He previously managed billion-dollar budgets and prepared financial forecasts for top executives at American Express. He's also involved in his local church, where he serves as music director. He also serves in the board of directors of Benita International, a nonprofit organization established to help orphans and the needy in Romania. Majority Leader Toma, thank you for joining us this morning.
Thanks for having me. Appreciate it, Luigi.
Also joining us is Senator Sean Bowie. Did I get that correctly, Sean?
Well done, Luigi. Yes.
Perfect. I've been practicing that all morning. Senator Bowie represents Legislative District 18. He's a member of the Senate Committees on Appropriations, Finance, and Commerce. He is among the most successful members of the minority party. He was the lead author of legislation that required school districts and charter schools to provide training in suicide awareness and prevention for school guidance counselors, teachers, principals, and other school personnel who work with students in grades 6 through 12. He has worked as a management consultant, working with Fortune 500 companies from across the globe. He previously worked for the provost office at Arizona State University. Thank you for joining us, sir.
My pleasure. Thanks for having me.
Also joining us is Kevin DeMena. Kevin is a senior advisor at DeMena Public Affairs and works with the public affairs, government relations, and political consulting clients of the firm. He has an extensive background in Arizona politics and policy development. He has been involved in every legislative session since 1980 and has led a number of major efforts resulting in substantial changes to Arizona law. Before forming DeMena and Associates in 1998, Kevin was a partner in Rob Duvall and DeMena. While at Rob Duvall and DeMena, he led the firm's government and public affairs efforts and managed a variety of public relations and grassroots campaigns. Kevin, thank you for joining us. And finally joining us is Jared Van Arsdale. Jared is a tax partner with Ullman and Company in Phoenix, as well as the immediate past chair of the board for the Arizona Society of Certified Public Accountants and chair of its Foundation for Education and Innovation. He specializes in tax compliance and planning for individuals, estates, and trusts, as well as closely held entities. Jared, thank you for joining us this morning.
Good morning.
Again, to our viewers and to our listeners, thank you for spending your morning with us. We would like you to get engaged, so please do send in your questions via the Q&A box or via the chat box, and we will try to get to as many of them toward the end of this forum. But first, I want to ask Majority Leader Ben Toma, what is the update on the budget process? Where are we at, and when do you reckon we'll actually get a budget done?
Thanks, Luigi. Kind of a loaded question there. In terms of the process, I mean, at this point, we're negotiating furiously here between the House and the Senate, and that's the first part that really needs to get fall into place before we then start negotiating line by line with the governor's office. And so the negotiations are ongoing. A big part of that, as we no doubt discuss further in the call here, will be how the tax package part of this will end up being solved, because that really is a really big issue this year. But that's kind of where the process is in terms of when it's going to be over. I mean, at this point, it could be over in a couple of weeks, and it could be over in a couple of months. Obviously, I hope for the former, but and we're working hard towards that. But I don't think this is the sort of thing that rushing will result in something good. So we'll take the time, whatever time is necessary, to make sure we get it right.
A couple of months sounds painful, Representative Toma. Senator Bowie, sir, what are you hearing in the Senate? And are the Democrats invited? I assume not, but correct me if that in fact is the case. You're part of the negotiation.
Well, I was going to say to Representative Thomas' point, I mean, we could be out of here by this time next week. You know, let's work together in a bipartisan way, and we've all got ideas, and let's hammer something out. Not everyone's invited. I'm invited to a lot of these conversations because I've supported budgets in the past, and I'm pretty pragmatic when it comes to, you know, what I think is achievable and what our priorities should be. So I think the House and the Senate are on kind of different planes right now. I think the House is working on their proposal, which Representative Toma can talk about. The Senate has their own ideas. I think the Senate is more focused on things like infrastructure and investments, where the House is more focused on very, very large tax cuts. So putting those two things together, those two visions together, like Representative Toma said, I think it's going to take a bit of time here to eventually come up with a budget.
Kevin, I know you don't like, and you've never given a prediction for sine die, but I want to ask you nonetheless. You know, what do you think how long do you think we'll be here?
So our rule is June 30th. Try not to schedule family vacations before the new budget year begins. This is a different time, though, with this much money, and this is unprecedented. I've never seen anything like this in terms of accumulated ability to spend. My experience has been it's easier to get the job done when there's very little to argue over. So June 30 for me.
And I think you make a good point. If there's so much money, then there's a lot more to argue over. And correct me if I'm wrong, it may seem, at least to me, it might even seem that it's easier when you're cutting the budget and not distributing you know, tons of dollars. Is that a fair assumption, sir?
What is it? I've been rich and I've been poor. And but in government, I'm not sure which is better. So not clear.
And Jared, for you and the society, what are you hoping to achieve this year? And give us an overview as when do you really want the legislature to get out of session and to wrap up their work?
Well, the time to exit legislature, I'll leave up to the professional legislators, and I am actually in Representative Toma's district, so he represents me well on that front and trying to get out there as soon as possible. But the issues surrounding the dollar amount Kevin referenced is substantial in size in comparison to the Tax Cut and Jobs Act we had in 2018, where the number, I think the JLBC estimated around $250 million, and it took to Memorial Day to get that figured out. So the thought process is it's a large number, it's a moving number, and sooner the better for some certainty for Arizona taxpayers.
I remember when we had a similar conversation, you know, about the same time last year, and JLBC gave an estimate of, you know, a surplus amount of between $1 and $1 billion, and that was how uncertain things, you know, was at the time. Now we know we have more certainty. We know there's $1 billion in the rainy day fund, and we're probably looking at roughly the same amount in, surplus revenue, if you will. Sean, you know, what to you are the priorities of your caucus?
Well, as Kevin said, you know, because of, you know, some federal dollars coming in and tax collections have been more robust over the last year than were expected. You know, the Wayfair decision, which I know I give Representative Toma a lot of credit for helping spearhead that legislation, more sales tax revenue coming in. So there is a lot to look at when it comes to the budget. As far as priorities for us, I mean, just speaking for myself, you know, I'm open to the conversation about tax reform, having an effort on that. I've introduced a tax cut bill, just put a plug in there, Senate Bill 1040, which would create a state earned income tax credit. That's something I'd love to see in the budget. But overall, you know, there really are some investments that I think we need to make as a state. And these are not luxury items. These are core functions of government that we really have not been funding over many, many years. Just to mention a few real quick. our state universities. Arizona has cut more from our universities than any state in the country since 2008. They have a new economy initiative that it's not just a blank check, it's dollars for specific projects around the state at our 3 state universities to invest in fields like engineering and healthcare and biodesign that are going to create jobs in districts like mine and all throughout the state. So making an investment there, I think, is important. The state doesn't fund our community colleges in Maricopa and Pima counties at all. They have a request for some STEM funding, which again, I think is going to create jobs and grow our economy. There's a lot of infrastructure projects around the state. Anybody who's driven from Casa Grande to Phoenix knows we need to widen that. That's something that some of my colleagues and I have been talking about. Housing, affordable housing. Our housing trust fund is something we used to fund annually, which we don't fund anymore. So again, these are not luxury items. These are core functions of government that I'd really like to see in our budget. And then I'm open to that conversation about tax reform, but we still need the revenue in place to fund some of these really critical investments that we have around the state. So those are some things that I would like to see in the budget.
And just to give a bit more context, total revenue in February stood at $828 million. That's almost 100% increase from the same period last year. And that's $200 million above the forecast, according to the Joint Legislative Budget Committee. Now, budget analysts have credited that unusually big revenue collection to the delayed start of the federal income tax filing. But even without considering the effect of the delayed refunds, February revenue was still 122 million above forecast. And that's a result of higher revenue from sales taxes. And Representative Toma, we've seen this pattern, right? Every single month, we have more and more and more. Do you foresee this pattern continuing through the rest of the year?
Yeah, absolutely. I think when the April numbers will come out from FAC, I think you're going to see those original projections revised up significantly from what they were already. And so, I think when we're talking about investments, I would say I definitely agree with Senator Bowie that I think myself to be a rather pragmatic person as well. And I've always been focused on solutions when I'm down here. And that the way, for example, is one that we finally were able to get across the finish line. And I know there was a lot of people that helped with that, but in the end, that was a solution that was workable, that was doable, that we could make sure happened. When I'm talking about, and when we're talking about tax reform and tax cuts in the House, I think the part of this that perhaps might be missed is that we are actually looking at this, or I'm looking at this, and I'm pushing it as an investment in the economic and competitive future for Arizona. And actually is very, very important, because I will argue, and probably not in this forum because we don't have enough time for that, but I would argue with anyone that if we do this right, that come 3 years from now, when we fully implement, hopefully, a massive tax cut, it will actually result in more revenue that we can do even more of the things that Senator Bowie was talking about. In terms of investments in infrastructure in particular, as just an example, since that was brought up, on top of all of the resources that we have in order to do this, to do these sorts of reforms, we have a significant amount of money left over to do infrastructure investments, as well as some of the other investments that were brought up before. So this isn't some sort of rice and beans after this sort of thing on all the other spending. This is this plus maybe Costco steak instead of Fleming steak, but still it's steak. I mean, there is, and this is what makes it so hard, right? As was mentioned before, we have so many resources available. It's unprecedented. And remember, I'll remind your viewers that last year, right about this time, a little before this time, in March, the predictions were pretty dire, right? We were in billion plus deficits. And then it was adjusted and adjusted and adjusted. And now we're looking like we're in multi-billion-dollar surplus is what it's going to end up being. So part of that is that we've had the shortest recession in the history of this country, which happened shortly after, right around this time, actually, last year. And then since then, the economy has just rebounded and done much better. And also that compared to some of our surrounding states, and especially, not to name any specific states, but I think everybody knows what we're talking about.
In California.
Yeah, there you go. You said it, not me. We're doing so much better. And we had a much more measured approach on the way we shut down our economy, and the way we restricted our economy, I should say, while some of the other states have completely shut things down. But the economic and the competitive standpoint, competitive landscape has also changed And everybody knows they're going from California, right, to Texas, or hopefully they're coming more and more to here. So that's the idea is if we attract these big businesses, I'm not so excited about the big businesses, although I think that's a good thing. But it's all the small businesses and the hundreds and hundreds of small businesses that are created to supply those big businesses that really get me excited and get me motivated to make sure that we get this right, that there really is an investment that we have to get right.
Thank you for that. Jared, you speak to a lot of clients, you deal with businesses, corporations, big and small. In terms of Arizona's tax climate, can you speak to what you're hearing from them? Are they satisfied? Are they contented? We know, for example, that Republicans in both the Senate and the House are thinking of a major tax cut. What are you hearing from your clients, in terms of the potential of at least $1 billion more in tax cuts, both individual and commercial, taxes?
Yeah. So, we represent a number of clients in multiple states, and it's pretty clear from the ones that live in higher tax jurisdictions that there's active consideration, usually around the process of retirement, that they consider moving or upon disposition of significant assets. But at the end of the day, the ones that are located in Arizona, at the end, no one particularly enjoys writing that check on April 15th. They just prefer it to be as low as possible, right? And the businesses themselves will do what they can to plan around those structures and to minimize their overall income tax liability on a daily basis, regardless of what the rates are. And Arizona, we see an influx of large corporations because of the competitive tax landscape. And unfortunately, for certain states like California, you see companies leaving simply because of the pretty aggressive tax liabilities that they incur. Is it the ultimate deciding factor for people coming and leaving states? I would argue probably not. Most people will use a lot of other personal business development tools to make that decision overall. But at the end of the day, most people don't particularly want to pay the income tax. They just prefer to pay as minimal amount as possible while within compliance.
And Kevin, I want to go to you. You've seen this tax climate change over time. We've passed tax cuts almost every year, and there are some years when the taxes are pretty big ones. Now, one argument that you often hear is that, of course, it hits those tax cuts hit our bottom, let's say it's bottom line, and therefore we have less money to spend. For example, I can tell you that in last year, 2020, the tax cut impact was $221 million. The year before, it's plus $135 million. In 2018, it's $152 million less for the general fund, $146 million the year before, and so on and so forth. What are your thoughts when you hear the state legislature contemplating, a major tax proposal that's probably north of $1 billion?
So it's an opportunity. The 80s and the 90s were about reliance on property taxes. And most people don't even the state used to have $1.25 statewide property tax rate in the early 80s. Took a while to wean us off of that. It was a pretty stable revenue source, but tax research wouldn't have it. So this property tax role in the 80s and 90s has kind of been replaced in the 2000s with income taxes. There really is a long, almost nationally driven march to minimize or eliminate. Arizona used to be that beautiful state with the great climate on the way to California. All of that's changed. And the amount of money that sits in the general fund right now creates an opportunity to recast the tax system in a way that makes us no longer the stopover state, but the destination state. I think that's what I hear coming out of Mr. Toma and, frankly, Senator Bowie. I'm anxious to hear what they've got in mind. I'm anxious to hear what's in the package.
And we will talk about that one, but before we delve into the details of the major tax proposal that Representative Toma is working on, I want to ask Senator Bowie about his proposal, which is a much smaller one, to establish the Arizona Earned Income Tax Credit and set the amount at at 5% of the amount of the federal Earned Income Tax Credit that's allowed for the tax year. Now, this proposal passed out of the Senate with a strong bipartisan vote, 26 3. Tell us a little bit more about this proposal, what it does, and and your hopes for getting this into the final budget proposal.
So glad you asked that question, Luigi. This is a bipartisan idea. It's been introduced in blue states, red states. There are a lot of conservative states that have a state EITC. So this would create, as Luigi said, a state version of the federal earned income tax credit. These are tax credits that go to low-income working families. They have to meet certain requirements. The larger the family size, the larger the credit. The Arizona version would be 5% of the federal benefit. So the math that we did showed a family of 4 making about $50,000 a year would get about a $300 tax credit along with their federal tax credit that they get. The cost is pretty small. It's around $75 million a year, but these would be dollars going directly to low-income working families, dollars that are more likely to be spent and going back into our economy. A lot of the conversation about tax reform over the years, especially the income tax proposal going to a flat tax, those proposals would disproportionately benefit those at the top end of the income scale. So this is something that goes in the opposite direction. Like I said, as Luigi said, it had broad bipartisan support. It passed 26-3 out of the Senate. So that's something I would like to see in the budget. It kind of goes in the opposite direction of what some of my colleagues have proposed. But if we're looking to have a bipartisan budget and looking to have a well-rounded budget in the end, I think it's an idea that we should consider.
Now, I wanted to ask because it's not quite typical for a Democrat to propose a tax cut. Most in your caucus would like to see a tax hike and spend that money for the priorities of the state, notably K-12 education. Tell us about your approach to tax cuts and why you're willing to even potentially risk the ire of your colleagues, for example, in potentially supporting a tax cut proposal.
Well, this wouldn't be the first time I've attracted their ire, but I will say, Representative Toma and I have worked together on, the manufacturing tax credits. We just voted on that a couple of weeks ago. That's really going to help districts like mine, companies like Intel and Honeywell, employ thousands of folks in my district. So I voted for tax credits in the past. For me, it's about the policy, not about the politics. I mean, I look at something like the earned income tax credit. Again, it's not a partisan issue. It's passed in blue states and in red states like Louisiana have one of these, South Carolina, Kansas. So it's been proven to work. And I think if we're looking for ways to help all taxpayers, not just those at the higher end of the income scale, I think it's a good proposal to look at and to consider as we work on the budget this year.
Representative Toma, let's talk about your tax or the House's tax cuts proposal. Can you flesh out the details, sir?
Well, sure, thank you. Without getting into getting myself into too much trouble here, I can give you the.
And that's okay. If you want to get yourself into trouble too, that's fine. I'll welcome it.
Appreciate that. You're always so engaging, Luigi. So first of all, I would like to say that I have the utmost respect for Senator Bowie. Him and I, he's absolutely right. We've worked on some of these issues together and we've gotten some very big things done. And so I appreciate working with them. And this is, from my perspective, it's always, and I'm always open to a friendly and honest and open debate on what we should do. Just to push back a little bit on the point though, first of all, I fully agree, and I don't really have any issue with his proposal, that it's probably a good thing. We should continue to look at that. However, I would like to just simply point out that when we're talking about going to a flat tax from a 30,000 foot level, it is right that it does make the system more progressive or less progressive, but that's because the system is already progressive. And so from my perspective, when you're looking at taxes in general, especially income taxes, it's a percentage tax. So by definition, you're already paying more the more you make, right? Because of this percentage of a bigger number is a higher number in the end. And so percentages are already fundamentally fair and sort of scale up and down based on your income. But going to a brief overview, and I'm just going to rush through this a little bit in terms of what we're kind of proposing, and we can get through the details and talk through those as needed. But the House idea is to go to a flat tax over a 3-year period. That year would actually start in 2022, so would be fully implemented by 2025. For the first couple of years, we're looking at dropping the 2 rates. just because of the way the funding is working and available funds are. We need to do it this way. So it would be 2.55 and then a 298 middle rate, and then it would go to a flat rate of 2.5 is what's envisioned at the end of the time. Keep in mind that one of the overarching, there's sort of two overarching drivers behind the way the House plan has been developed. I'm sorry, that's the right word. One is that it has to be a tax cut for everyone all the way through. And two is that it really has to improve our competitiveness compared to our neighboring states and compared to our current system. And it really isn't designed to incent the type of thing that I talked about before, investment, and actually to increase our revenues in the end, if we do this right. Other things that are included, assessment ratio change on commercial property valuation. It's a pretty modest drop from 18% to 17% over the next couple of years. The reason for that is most small businesses, well, all businesses really, but most small businesses, the vast majority, end up paying for their super high commercial property taxes through their either common area charges or through their triple net leases. And so, and by the way, that 18% valuation puts us higher than all of our neighboring states, including California, on commercial in particular. Now remember, on residential, we do well on property tax, but on commercial, we don't. And if we're trying to help businesses, especially businesses like restaurants, for example, that are trying to recover from the hits they've taken during the pandemic, this is one thing that makes a step in the right direction. In addition to that, full conformity, I know Jared should be thrilled about this, but full conformity is envisioned as part of the current draft. There is a couple of smaller provisions, charitable deduction adjustment for inflation. So that right now, Arizona has kind of a unique situation where even for those that take the standard deduction, they get 25%, gets deduct 25% of charitable contributions afterwards. And that just simply increases that amount by the CPI. So it'd be 2 or 3%, whatever it is per year. So until what's envisioned is becoming 100% deductible as well. Keep in mind, final point, oh, right, I forgot a big one actually, 4.5% income tax cap is envisioned. This is actually a Senate idea, and it's something that works sort of in conjunction with Senate Bill 1783, which we can talk about at some point in the future. But the important thing to note here is that the revenues that were intended for Prop 208 would, assuming Prop 208 withstands a legal challenge, would still go to 208, and so all of those funds would still be there. This is just changing the way some of those funds are paid. So that's roughly what's in the package. And final point, as I said, keep in mind that on top of all of this, we have lots of funds available still for infrastructure investments and some of the other needs that we have at the state level that were mentioned before.
I want to flesh out just the Prop 208 component of this tax proposal. So what you have in plan, correct me if I'm wrong, is that everybody pays a flat income tax rate of 2.5%. And those who are affected by Prop 208 then pays an additional 2% or 2 points. And that funding then goes to the Prop 208 funds. Do you have an estimate as to how much that would affect the amount of money that's going to be available in the education surcharge fund that's created by Prop 208?
So once again, yes, you're correct. What's envisioned is the 2 point that the taxpayers that are affected by that surcharge would pay the first 2 points. After that, the remaining 1.5 would actually be backfilled by the general fund. So to answer your question, all of the funds would still be available. Whatever the funds would have been available to 208 would still be available under this proposal.
I want to pull in Senator Bowie. Sir, what are your thoughts about this particular component, the one that, the Senate proposal, and correct me if I'm wrong here, the critics of the Senate proposal see this as really a counterpoint, right? It's meant to undercut the Prop 208 tax surcharge, but I want to get your thoughts, sir.
How much time do we have? So just overall on the proposal, I know from my conversations with some of my Republican colleagues here in the Senate that it does not have 16 votes. So I know there's going to be time for negotiation and arm twisting, but the support is not there yet. So to reference something that Representative Thomas said, going to a flat 2.5% rate, yes, that would be a cut for everyone, but the lowest rate now for those who have very little income is 2.59%. The highest rate for those with income, I think it's over $160,000 a year, is 4.5%. So going to a flat 2.5% rate will very disproportionately reduce taxes on wealthier taxpayers on that income above that threshold. And I think it's worth pointing out for individuals making less than $250,000 a year, couples making less than $500,000, so they're not held to that Prop 208 surcharge. When you compare us to other states, Arizona has one of the 10 lowest state income tax rates in the country. Folks will point to Nevada and Texas and say, well, they don't have an income tax. Well, Nevada's budget, 40% of it comes from gaming revenue. Texas has a lot of oil in the ground and their property taxes are much higher. So the revenue has to come from somewhere. So my ask would be, if we have to reduce taxes and look at a way to make it fair for everybody, we should look at our sales tax. Our sales tax rate is one of the 10 highest in the country. And I've heard rumors, I don't know if Representative Toma can comment on this, but one of the ways to help pay for, that's been talked about, to pay for that income tax cut is to increase the sales tax, which again is already one of the 10 highest in the country. So I think there's a lot of bipartisan concern about that proposal. Just to put $1.5 billion in context, that's over 10% of the revenue in our budget. Our individual income tax is over 40% of the revenue in our budget currently. So I'd love to hear how we're going to, I know there's a lot of one-time dollars right now from the federal government, but if we're looking to make permanent long-term changes to our tax code, how are we going to make the investments that we need to make to stay competitive and be a competitive business environment? How are we going to invest in education, our universities, infrastructure, our healthcare, all the things that we need to invest in? So those are my initial thoughts.
Thank you, Senator. I want to pull in Jared. Jared, when you hear a 2.5% flat income tax rate to 2.5%, how do you anticipate your clients are going to respond to that? In terms of the process of when you're filing your taxes, does that make it, if it's a flat tax, correct me if I'm wrong, I would reckon it makes it simpler?
Simplicity would probably be unchanged in comparison. I mean, Arizona's income tax code is all relatively simple because it relies entirely on the federal income tax code. And I would make a note is both proposals from SB 1040 from Senator Bowie and what Mr. Tome was talking about, both of those rely again on the assumption of conformity and the reliance of the entire federal tax code in both circumstances. But from the State Society of CPA's perspective, we try to remain agnostic on the source of revenues and the tax rates themselves, although we do have thought processes and opinions on how to implement in the process in which Department of Revenue and taxpayers are affected by that. But from an individual taxpayer and business perspective, we're talking about is relatively a 2% tax cut entirely, so it'll be something that'll be built into projections. But in regards to individuals planning around it, probably not at the top of the priority list, but it's definitely something taken into account.
And Kevin, you've seen the state, as I mentioned earlier, cut taxes. And one of the goals is really, I think the governor had expressed this before, is to get to a 0% income tax at some point. And he's been working toward that. Representative Thomas' proposal gets very close to, not as close, but, moves in that direction. What do you make of this effort? And you mentioned the historical perspective here, the changes in the way we prop the budget.
Well, first of all, it is an easier exercise to cut taxes when we have an abundance of revenues. What we don't really have is a long-term set of fiscal controls where we really do projections and set metrics for the next 5-10 years. JLBC does an exceptional job of this, but this is really new territory. The Finance Advisory Committee and others, they give us bumpers and guidelines, but we don't necessarily have a rolling 5-year plan in Arizona. Term limits, you can attribute it to a number of factors. I'll take that one. The masterful part of this is resolving the disastrous signal that Prop 208 has sent nationally. It's masterful politics to continue to fund this increase in education, but simply identify a different source of funds. And the effort here to remove the the sign on our door that says wealthy CEOs need not apply, that's got to go to the top of the list. Funding 208, but yet not funding it through high wage income taxes, that's masterful. I'm curious to see if it makes it through the process, but from my point of view, that's an essential change and a good one.
Senator Bowie, I want to get your thoughts on that one, sir.
Mhm.
So can you repeat that?
Kevin just said that this is a masterful stroke to still fund Prop 208, but not but take that burden off of higher income earners in the state. And therefore, the idea is that you then tell the country and perhaps the whole world that if you're a wealthy person and you're planning to come to Arizona, we're not going to tax you the way, quite frankly, voters had intended, just last year. Your thoughts?
Yeah, the voters did approve Prop 208 last year, and I know some folks on this call and watching maybe were not fans of that proposal, but it's something that the voters did approve. It's now in our Constitution and it's voter protected. But again, as I mentioned earlier, I think we've done a good job over the years. And again, I've supported budgets in the past. I supported the budget last year. I supported the budget in 2018, where we made revisions and reforms to the tax code. I think we've done a good job of having very competitive tax rates, a very competitive regulatory environment. The weather's great here. There's a lot of reasons for people to move to Arizona. I think they're still going to be looking at Arizona as a place to work and to live, even with Prop 208 on the books. So like I said earlier, I'm always open to reform and looking at ways to reform our tax code to make it fairer. The property tax, the commercial property tax cut is something that can be looked at as well. I think that's something that a lot of folks from the commercial side would like to see. So I think there are ways to do that, but I'm leery of making permanent long-term changes to our tax code, looking at one-time dollars that are coming in. And I mentioned earlier some of the things I would like to see in the budget. Those are not luxury items. Our universities, as I said earlier, Arizona's cut more from our universities than any state in the country. Since 2008, we have prisons that are falling apart. Our DPS officers need a pay raise. I mean, these are very, standard things that government should be funding. And if we were funding all of those things, I'd be right there and say, hey, let's talk about returning more dollars to the taxpayers. But I think if you ask voters, should we be funding these things? Should we be funding infrastructure, education, pay raises for our DPS officers? I think they would support that. So there's got to be a way that we can do both. And then, like I said, I'm open to that conversation, but I want to make sure we're talking about investments along with permanently reducing revenue in our state budget.
I want to just, Mr. Toma, just a quick follow-up for Senator Bowie, and then I'll come to you, sir. The idea of shifting where funding is coming from for Prop 208, I want to ask you about that. Does it matter to you where the money comes from?
Again, I voted no on the Senate proposal that Representative Toma mentioned. I think the voters are very clear that they want us to invest more in education. We've made some progress on that in recent years. Like I said, I've supported budgets that do that, but I think voters would like to see us make more of a commitment to our teachers and to our schools. So again, Prop 208 is voter protected. I know there's some clever workarounds to try to get around that, but I want to see us invest more in education in this budget and in future years.
Representative Toma, go ahead, sir.
Thanks, Luigi. First of all, I just want to start with a couple of things that were said before. First, because our revenues are so much better than originally anticipated, there is no TPT increase or offset envisioned in the House plan at this point. So I just wanted to make sure that that's clear and that there's no misunderstanding there. Secondly, I am heartened and very encouraged to hear Senator Bowie said that if we do some of those things that he mentioned, that he might be willing to consider the House tax plan, because we are actually talking about doing all of those things that he mentioned, that he just listed in the upcoming budget on top of what the House is proposing. That's how good our revenues are. I think Mr. Domena mentioned this briefly. This is really unprecedented. The amount of funds we have available to make the budget work this time is truly unprecedented, and I can only chalk it up obviously to the effects of COVID and the fact that we had a sort of a stunted budget last session, and all that sort of piled on and made this the way it is. But going back to 208 for just a moment, I'd just like to make sure that nobody misunderstands. what is envisioned is that 208 gets their entire, again, assuming it withstands legal challenge, gets their entire funding. So in the House plan, nothing in the House plan cuts funding from 208. Just to be clear, it's a question of where that funding comes from. But my problem with 208 is it's really, there's a certain amount of sort of class warfare that that has been baked into that in order to fund education. There were previous proposals of funding education in the past. As Senator Bowie mentioned, we did 20 by 2020, which was something that, at least in the House, was a Republican-only thing back when that happened. And we've continued to increase education funding. At one point, and don't quote me on this, and don't hold me to, but I just did since 2017 that I've been in this House. I think we've spent something like 3 or 4 billion more in education funding and increases over that period of time. That's a lot. I mean, that's a lot on a $12 billion budget if you do the math on that. So that remains a priority. Infrastructure remains a priority. All the things that were mentioned remain a priority, and it can be done. My problem with 208 is, and just class warfare in general. But remember, I think you said this at your intro comments. I came from the egalitarian utopia that was communist Europe, and it just doesn't work. That's the problem. I mean, I think Thomas Sowell said it the best. It just, the problem with those ideas is that they don't work. What ends up happening is, as you declare war on the wealthy, pretty soon that bar goes down, and then eventually what ends up happening is you've eliminated the little guy. I mean, just to give you, and sorry, the middle class in particular, you create two classes, those that have and those that have not. There's a lot fewer in those that have. Everybody that has not ends up being equally miserable. That's what happened under communism. That's what happened under a lot of these social systems in the past. So when you look at the actual effects of taxing the wealthy in this case, basically what you're doing is you're cutting the incentive for these people to reinvest and to create jobs that end up being better for the economy. I mean, that's really what you're doing. And plus, the wealthy, and unfortunately, maybe, I'm in no danger of being affected by 208 on a personal level. But you look at what's going on with that population, they are mobile. They would just change their residence to Nevada or to Texas or to Florida or any of those other places. I mean, that's what happened in New York. I think, I'm not sure if it was Cuomo or who was it that or de Blasio, I forget who it was that just said we kept raising taxes on the rich and then they left. And that's what ends up happening. So then we don't lose just the 208 revenues. We lose the income tax, period, from those people and their investments. So final quick point, when it comes to 208, it is that if it worked, I'd be more than open to having those discussions and seeing how, doing that. But just keep in mind that what was mentioned is that we are a high TPT state. That's true. We're really high on the sales tax compared to some of our other neighbors. What's also true is that 208 now puts us as the highest or one of the highest income tax states as well. And that is a problem because now we're high in two categories instead of just one. So that's something that should be addressed as well by proponents of 208.
You mentioned that you don't earn enough to qualify so that the surcharge would be imposed on you. So your $24,000 a year salary as a legislator just doesn't cut it, huh? Senator Bowie, go ahead, sir.
Just to chime in with two things. The last thing that Representative Thomas said, as far as having one of the top income tax rates, again, that's for those who would be subject to that surcharge. So for the over 90% of taxpayers, including myself and Representative Toma, and probably a lot of people on this call who are under $250,000 a year or $500,000 for a couple, it's not one of the 10 highest in the country. The other thing I want to mention too is this proposal, I worry about the potential impact it's going to have on our cities and towns as well, and some of that state shared revenue. And I represent some of the largest cities in the state, Phoenix, Tempe, Chandler, and Mesa. They're looking at potentially losing, tens of millions of dollars a year that goes to firefighters, police officers, public safety. So I hope that gets considered as the talks are continuing about the impact that it could have on our local governments as well.
I want to talk about Irs Tax Conformity because this is legislation that typically gets out of the legislature very early on, typically late in January, first 2 weeks of February, something like that. And the reason for that is that, at least in the past, Irs conformity, once we have that legislation enacted into law, that provides certainty to accountants, but also to businesses, and really to also to individuals. And now it's, second week of April, or going into, going next week, you're going to be the middle of April already, and we still don't have Irs tax conformity. Jared, talk to us about what kinds of complications arise from that, and also if you can talk about what's in the Irs conformity code legislation. What's in it this year?
Yeah. So I just one quick point, and don't let this bald head fool you. Conformity's been around as long as I've been alive. So I think Department of Revenue makes the correct assumption that the state will conform, right? And what it does is it leaves taxpayers in a position of having, if they file ahead of the signage of the bill, that they have to go back and revisit the consideration of whether they need to amend to reverse some of the tax positions they take. And the most significant example of it in the current year is the assumption of the non-taxability of the PPP program. And just as a quick example, large retail institutions, music venues located here, I think we all assume that they were decimated by the last 12 months. And as a result, we can make the assumption they're going to have losses. Well, they receive a PPP fund that would offset some of those losses, and hopefully they were able to keep some of their people employed. If that ends up being taxable, let's say you have a $200,000 loss, but a $300,000 PPP, it's plausible with nonconformity, they had to pay their tax on the PPP in a year in which they had tremendous losses. And it seems somewhat counterintuitive to the intent of the stimulus programs to be grants, but that's what other states have seen with this kind of rolling conformity or static conformity. Is some will adopt it automatically. Arizona makes a vote on it each year, hopefully earlier in the session, to provide some certainty, some stability, some reliability to the tax process. The state tax and federal tax process is naturally a complex system. So when you add uncertainty into the complexity, it just creates an even more troublesome environment for people just to get something filed and maybe a higher rate of noncompliance and having to come back and amend. But the overall is, I think, most businesses, most individuals, they just want to have some certainty around, am I filing what's correct, and am I minimizing my tax liabilities?
And you mentioned the issue about taxing the Paycheck Protection Program, right? If you're a business, you applied for the loan, you got the loan. If you don't conform to the IRS code, then potentially you pay a tax on the PPE amount that you have gotten. Am I hearing you correctly?
Yeah, exactly. It would be subject to Arizona state income tax in the year of forgiveness. Exactly. So when it's already been tax exempt for the federal purposes.
And Kevin, we're now in April. So I know that the legislature enacted or the governor just signed a proposal, the legislation to extend the tax filing deadline. Right? But my wife is on a schedule. By March, she starts compiling our taxes, and by the end of March, she's talked to our accountant. Now she's delayed for maybe a week, but she's within that time frame. So for a lot of people, this is a behavior that they do and doesn't really change too much for most folks. Well, what happens right now when we don't have tax conformity yet?
So it imposes a cost. We've been a conforming state fully since the mid 80s. And to key off of what Jared said a moment ago, and Jared is my CPA. So annually we bring a big hefty bag of receipts and drop them on his desk and then wait. In America and in Arizona, taxpayers want low taxes. That's number one. But survey research and common sense has confirmed over time that their number two priority is stability and predictability. If we can't pay a little, if we can't get it down low, at least I know what the bill will be and when it's due. So the Arizona legislature in the last few years hasn't even been able to deliver that. Timely conformity is a kind of not a heavy lift, it's light duty. And I attribute this to term limits and pandemics, but we need to reestablish conformity as an early priority. Tape a note on the door every 2 years when you get here, Key things to consider. Arizonans, as we just heard, just need that predictability. Case closed.
So Representative Toma, I want to go to you. What's the reason, sir, why we haven't actually passed this bill and sent it to the governor?
Well, as you may have noticed, the House has been ready to pass it for some time now. And I've been a proponent and pushing full conformity for, well, since the beginning of session, ever since 2019 with the lovely conformity discussions we had for that session. So yeah, I mean, I think we're ready. The issue is it does have pretty significant budget implications this year. In particular, just like net operating loss, for example, which is part of the Fed thing, is that anyway, the total price tag of conformity, just to give you an idea, is roughly 625 million at this point for this year. And it is one-time money, so we can definitely afford it. And I fully expect that we will do it and we will fully conform, just in sort of preliminary conversations. But it is hard to ignore that amount of money when you're talking about trying to decide what the final budget picture is. So I think at this point we're all on the same page on that item, and don't quote me for that, but I can tell you in the House we're definitely on the full conformity bandwagon. So I would expect that you would see it moving relatively quickly.
So what I'm hearing is that it's really tied to the tax cut proposal, and which is tied to the overall budget proposal. Is that what I'm hearing?
No, not exactly. I think it's tied to the overall budget proposal more than it is the tax proposal. The reason we included it in the tax package is because we fully support it. And whether or not it ends up moving with an eventual tax package or with the budget or on its own prior, I would prefer to just get it over with and get it done. And we are ready to split it out and do it as a standalone bill.
Splitting it out in a standalone bill, Senator Bowie, I would assume your chamber, if that is a standalone bill in your chamber, that gets out pretty quickly.
Yeah, I think it's important for folks to have certainty, especially with the deadline coming up next month. So yeah, I mean, we do this every year, as Kevin said, and I think it's important that we do that to provide certainty for taxpayers.
So it looks like it's going to happen. At some point, it's going to happen. We just don't know when. So we're looking like between now and the end of June, something like that. And we'll have that certain. Then is that this it looks like what I'm hearing. Is that a fair assumption, Representative Toma?
At this point, I think that is a fair assumption. Yes.
I want to go to some of our audience questions. One of them specifically asked Representative Toma, how exactly is the funding for Prop 208 kept at what the voters had intended, or at the same levels that voters had intended with your tax proposal? If you can flesh out the detail and explain exactly how the shift in the way this is funded is going to ensure that.
Sure, I'll give it another shot here. So Prop 208 basically said the 3.5% surcharge, right, for high income earners will go to education funding, and there's a kind of distribution in there. But not getting into the details of that, bottom line is 3.5, that surcharge has to come from high income earners. So assuming that the House tax package is fully implemented, what would happen is the high income tax earners would pay the first 2.5 is they're going to be our flat tax at that point. On top of that, they'll pay the next 2%, which would be up to that 4.5 cap that's envisioned. Again, that's a Senate proposal. And then the remaining 1.5% would be backfilled by the general fund into 208 funds. So 208 would get its entire 3.5% surcharge.
Another question, and I think both legislators, if you want to weigh in on this one, how this, you mentioned that we have more money than we ever imagined in terms of surplus revenue. How do we ensure then that as we spend the bulk of that amount on programs, that that we can actually fund our core programs in the state in perpetuity? I guess the other way of asking it is that how do we ensure that our funding is sustainable, given the tax cut plan that you're proposing, and given that Senator Bowie's also interested and his caucus is also interested in spending big amounts on priorities?
Well, I'll take that first. A lot of it is one-time revenue. And again, we can use it for one-time expenses, infrastructure in particular. is one where it's going to create jobs. It's all spent one time. A lot of my colleagues here in the Senate on the Republican side are very focused on infrastructure and making investments there. We can pay down debt that we have as a state. We have a K-12 rollover that's about $900 million. It just gets rolled over every year. We haven't bought back all of our state buildings yet. We could even put in the rainy day fund. We can pay down some pension debt. I mean, there's a lot of things that we can do one time. So we're not committing to ongoing expenditures. So if we do have, if it's billions of dollars of one-time dollars, let's look at one-time projects or save it. If we have a recession in the next couple of years, I think those are better uses for those dollars than a potentially multi-billion-dollar permanent tax cut.
Representative Toma?
Yeah, a couple of things. First, I've remiss and I made a mistake here, not mention something that that Senator Bowie should like, which is that the other thing that's included in the package, at least for the first couple of years, is a $50 per dependent tax credit, $200 max for low incomes under I believe it was the same cutoff that Senator Bowie's bill had. But that aside, going back to the question at hand, keep in mind that I'm not sure what's more difficult, doing something that's a tax cut and then having to figure out, worst case scenario, some years down the road, we have budget deficits that we have to deal with, or increasing spending on an ongoing basis significantly, and then having to make even deeper cuts in future years. I think, quite frankly, that would be more painful. Not to mention, as I've said before, that I believe that if we do this right and this package is designed in such a way that it will actually increase revenues into the future. But the other final point is, and Senator Bowie's correct, the vast majority of our funds that we have the sort of really large amounts in is one-time spending, but the tax proposal really relies almost entirely on ongoing capacity. So that one-time spending piece is still more than available for infrastructure spending and some of the other priorities that maybe special projects of various types that we can invest in. So really, it's the ongoing that we're talking about. We're not relying on one-time spending to make this work. We budget out for 3 years, and even after we budget out for 3 years, there's significant amount of ongoing left over. Not to mention the almost ridiculous amounts of one-time spending that we have left over, envision after implementing the tax cut. So that's what the revenues currently look like. So it really is a responsible solution at this point.
And thank you for that, Representative Toma. I do remember a time when we both spent a ton of money and we also provided a ton of tax cuts. This was during the Napolitano years, and I think we kind of knew what happened after that one. And I guess I will leave it at that. I want to thank again Jared for joining us this morning. Thank you, sir. Kevin, thank you again for joining us this morning. Senator Bowie, thank you. Representative Toma, thank you. And to our sponsor this morning, I want to thank you for engaging with us this way. Without your support, we cannot hold platforms like this one. And to our audience and to our listeners, thank you for spending the 1 hour with us. And with that, I'll say goodbye for now, and I'll see you soon.
Thanks, everybody.
Bye-bye.
Thank you.